My first trade setup that I like here, and I've talked about this one before in the game plan, is Dollar General. Now again, is this something that I like for the long term? No, absolutely not. I have no clue where this will be, honestly, in 1 year from now. What I do know is that we have this perfect measured move into major technical support. The methodology that I teach in the Winning Trader series goes over factors and putting factors together to increase your probability of success. And so again, doesn't guarantee success, but it's increasing probability of success. So what we have here very clearly, I'm going to go to our monthly chart. There is a long-term trend line. Look at this long-term trend line on Dollar General. We're going back to 2011, all the way back here. All the way, we're going all the way through this period, and we find ourselves right in this range. Okay, so that's factor number one. Factor number two, I mean, you could obviously find more as well in terms of factors, right? But if we flip over to our daily chart, we now can see very clearly that this has been a replication almost identical. This high before this rollover to this low is $71.70 approximately, right? This move here from this high before this rollover, $71.74. So essentially you have replicated this move. Notice after this move, we got a technical bounce. My guess again is we are right around the $100 even number. Don't be surprised if it pierces 100, the 100 level. That is certainly a possibility. It's only about 2% lower. But my guess is overall, somewhere in this vicinity, we'll get some sort of bounce in the near term. Now again, notoriously, I am a swing trader, guys. If you ask me what I'm holding for the long term, do I have long-term positions? I do, but they're very low-key. One of them would be gold and metals, right? I have some metals for the long term, and I have a little bit of my hodl position on Bitcoin that I picked up when we were below 20,000. It's only a very small position as I still am wary of where Bitcoin could go. Other than that, I don't trade long term. I just don't. I can be more active and make more money for myself because I know what I'm doing by trading shorter term swing trades. So essentially on this, you see this bounce back to, I don't know, let's say 110, 115, 10% gain, boom, lock it in, move on. Because the key is this, guys, is that the longer, and this is how I view it, and I'm just speaking for myself here, but the longer I stay in a stock or a crypto, the more risk I'm taking on. Now, you may say, well, why is that? Well, because if I'm in a stock for 1 week, I'm only in that period where something extracurricular can affect that trade. For instance, what happened over the weekend with the horrific stuff going on in the Middle East, right? And so the quicker I'm in and out and back into cash again, especially with the dollar as strong as it is right now and getting 5% on that money is very lucrative unless I see an opportunity that can deliver me much more in a very short amount of time. And so the longer you're invested, believe it or not, the more risk you're taking on. Now listen, if you're like a long-term investor that's 20, 30 years out, it becomes inconsequential. But again, a lot of people, the problem with a lot of retail is that they get whipped out. If you look at 09, right? The markets were crashing in 09 when the markets were bottoming. A majority of smaller investors got spooked and panicked and dumped at the lows. That's the problem. You can't allow, if you're going to be a long-term investor, you have to be a long-term investor and not even worry about the depressions, the recessions, that kind of stuff. You have to be for the long term. All right, so Dollar General is one of them, guys. I do continue to like that one.